Okay, in this video, we'll be looking at the basics of price action. What do you do when you're looking at a new chart? Steps that you have to go through to qualify trades, and how to qualify said trades. What are the things you're looking at? And what are the invalidations you're looking at? And what are the invalidations you're looking at? Okay. And we'll do this with Litecoin. We'll also do it with the stock in a bit. But we'll start with Litecoin. Actually, we'll do it with Litecoin and FX. Yeah, Forex pair. Right. So before you look at anything else, remove all the indicators that you have. Don't have anything in there. Okay. Remove everything. Go to the weekly or the monthly. Okay. We're going to start with the monthly. Okay. Now, what I would recommend everyone to do when they're starting out is actually invert the chart and then start out. Okay. So what you're looking at first and foremost is, as always, trying to find the failures. Okay. So high, failure. Okay. Failure. Failure. Okay. So you've identified the two failures, the high and the low. Now you might be thinking, oh, we did a lot of a fuckery here. Doesn't fucking matter. This is the failure. Same way, that's the failure. Okay. So failure to gain levels and retest and make new lows. Why? Because this is the start of the move that made new lows. And a failure to gain to make new local highs higher than this high. We haven't made a new high yet. So this is a lot more, in terms of levels, a lot more weaker than this one. So this is a stronger level than this one. Why? Because this actually made new lows. This hasn't made new highs yet, right? This move hasn't made new highs yet. We haven't gone above this yet. Okay. So this is a much more stronger level. Now, what you can do to qualify the ranges is you can do a simplified pull from here to here and only have the 0.6. Okay. The only thing you need is the 0.6. And you put a level there. Okay. This is your mid-range. So throughout this structure, this is your mid-range. Now what you need to qualify next is, did we gain and hold that mid-range? And the answer to that question is yes. As you can see, we gained and we held that mid-range. That is the reason we went up to retest this. Okay. So now you've qualified the high, you qualified the low, and we qualified the invalidation of the whole move, right? Because if we lose this level, this whole pump is invalidated. So what you want to do is you want to hold the high of it. Because we've already tested the low of it. We've already tested the low of it. So the only level left is holding the high of the range. Okay. Now it looks a little bit tight now. So now it means you need to go to the small time frame. So now you go to the weekly. Okay. Right. Failure done. Okay. Now you can keep looking at it this way, or you can just invert the chart. Right. So now you've understood the level to gain for a trend reversal. Okay? You've understood the level to gain for a trend reversal on the weekly and the monthly. So you've understood that. Now you can look at the nitty-gritty. Now you can look at the small time frames. Okay? So now you go to the small time frame because this is the local move that took you up. Okay? So now you need to look and go, all right, what started moves down? Okay? So you're going to have to start finding out the levels that were retested that made moves down. This is the first one. The second one that made moves down. It made new lows. It made new lows. So this level and this level is your important levels. So this is the range you want to trade right now. Hold this, test this, or break above that range. So what does that mean right now? It means that we must hold and gain and test this level. Now the question is, have we done that already? Now it's not as obvious, but we have done it. I can see it, but you might not be able to see it. So narrow it down to the daily. Okay. Yep, we have done it. So this has been done. We have gained and tested this level. Now we need to hold a higher low of it. Have we done it? Right? Because this was the previous one that also made new lows. Lower than these lows. So this level is very important as well. Did we gain and hold it? Yes, we have. All right. So the next move to hold is the higher low of that one. Now that takes us to the local range. Okay. That is why this was a long. Because this was the only level that we needed to hold for a continuation up. Right? Now, after you found out using all that stuff that this was the level to hold, it's not really useful anymore, is that? Like, we're already pumped from it. But you can use the same mechanism to find out now the invalidation. So it's going to look a little bit dirty, so I'm going to delete all the lines here. I'm going to delete the box as well, right, for now. Because now you need to, okay, so let's just put in the level here. So from all that step-by-step process, we found out that this is the high low we need to hold, okay, with which we've already done, right? Understanding that now is relatively useless, right? Because you're not going to go back in time and take the trade, are you? So you need to now qualify this mechanism to right now, okay? So the way to do that is go to the 4-hour and look at, okay, do the same thing that you did before. Find the level that made new lows. Okay, this is the local that made new lows. This is the other one that made new lows. Okay, so this is the first level you want to gain and hold and continue. Have we done that? Pretty fucking close. We haven't quite hit it yet. There is still a potential for us to come in down and retest that level. But that is only going to happen if we lose this one. So now you're qualifying a trade. So what does that mean? From all that information you've qualified, if we lose this level, we're going to come down and retest this. Right? Why? Because we haven't tested it yet. So from the monthly, from the weekly, from the daily, you're doing the same thing over and over and over again to qualify what is happening right now, to try to predict what's going to happen in the future. That is what you're doing. Because we've already done this, so if we hold it, it means continuation. If we don't hold it, it means there's a short opportunity. And there's your trade. And if you already have a long, you also know where your invalidation is. So you can move your stop losses to profit. Right? So you can close the long and take a short. Because as soon as you get invalidated on a long, the word invalidation means there's a short in play. And vice versa for shorts. If you get invalidated on a short, let's assume this is a short, right? Which it's not, but let's assume it is. This is your invalidation. So what you do is you have your stop loss in profit somewhere around here. The same way for your longs, you have your stop loss in profit somewhere around here. Because if we do start closing below it, there's going to be a short opportunity, right? Or in this case, a long opportunity, right? Because we'll gain this level and hold above it. So this is why you're looking at just from a price action point of view. Now, you can also look at it, right? You can also do this using just a simplified version of sequence projection, right? Where you're projecting the price action. The priority is understanding what I've been talking about for the last 10, 15 minutes or whatever this was. But you can use this method, which is the one I'm going to talk about next, to confirm if the previous method has some legitimacy or not. And you're only going to use it as a confirmation. You are not going to use it as a priority. It is only as a confirmation. Okay? So for you to use it this way, first thing you need to do, right, is find the low. Now, it is going to be very tricky on this one. So what I'm going to do is, because you can do it either direction. You can do it on the short, you can do it on the long. I'm just going to do it on the inverted, because I'm trying to make it a little bit tricky, so that if I teach you and it makes sense on the tricky bits, it's going to make sense on the non-tricky bits as well, right? So find the low. I think we all agree this is the low. Find the high after the low. Find the high after the low. I think we all agree this is the high after the low. Find the failure of said high. Okay. I think we all agree this is the failure. And you use the body, not the wick, the body of the failure. Okay. And then what you need to find is the swing. This is the low. This is the swing. So what you do is you pull from here to here. Now what you've done is you projected, or you extrapolated this whole sequence into the future. Okay? That's what you've done. You found the invalidation and you found the target. So what does that mean? Right now, what it means is this is the level to hold, this is the level to gain, and that's the level to retest. If we fail, it means we're going to come down to retest this one. Right? Where is the negative? There you go. Your first PT would be here, and your second PT would be there. So what does that mean? It means the same thing that you did before is the same thing you do now, which is if you have shorts, stop losses in profit. Take some profits. If we gain above, you're going to get stopped out, means there's going to be a long opportunity. If we don't, next profit target, and so on and so forth. Right? You're doing the same thing that you did before, but you're confirming it. Right? The same fucking trade. Right? Because this was the invalidation before. Right? Right? So, that is what you do. So we went from the monthly all the way to the 4 hour. Now you might be thinking, okay, is this a thing on the 3 minute? Yes, it works on the 3 minute. Now, I wouldn't necessarily recommend you guys look at the 3 minute. I would only recommend up to the 4 hour. Okay? Now, just to prove my point, it looks all fucked up on Litecoin though. So, we could do it on the 3 minute, but what I'm gonna do, all right, let's just do it on the 3 minute. It looks all, it's all fucked up though, so it's cracking, so yeah, it makes sense. All right, so find the low, find the high after the low, find the failure of the said high. So this is the start of the move down, and find the swing, which in this case is this one. Gain, hold, continuation. Close above, gain, hold, continuation. Close above, gain, hold, continuation. So there is going to be a thing at each of these points. The only one that hasn't been kissed yet, what do you know, is the level we wanted to come back down to retest on the 4 hour, right? Which was this level, right? Which is the level we haven't tested yet. So you can actually do it on the higher time frames, and obviously this is the other one on the 4 hour that we said is the level to hold. And as you can see on the 3 minute, it is a level to hold. So the extrapolation of price action on the 4 hour and the extrapolation of price action on the 3 minute is validated and confirmed. So it's the same move. Because it has to be the same move. It can't be a different move just because you change the time frame. Because if that was the case, then it would be a short on the long one and be long on the other. That's not how it works. It has to move the same way on different time frames, right? Because that way you can go to the 4 hour, and if it's too wide on the 4 hour, you can go to the 3 minute or the 1 hour and look for much more precise entries, right? That way you can look for more precise entries, right? But the movement is the same, up, right? So both time frames should give you the same indication of movement, which is up, right? So there's the Litecoin one. The next one we're going to do is going to be on FX. So let's use a very simple one, EUR/USD. EUR/USD. And we're going to use on this one because I don't think I've charted this one. Yeah. All right. Same thing that we did on the other one. You're going to go to the monthly. Okay. Just to make it a little bit more confusing, we're going to invert the chart. Inverting the chart is very useful to understand the psyche of whether you're biased or not. Looking from it at the inverse perspective is also very beneficial, right? Because generally what happens is when you're trading a trending market, whether that be an uptrending market or a downtrending market, people tend to get imprinted into that market, right? And you've all done it yourself, right? If you made a lot of money on shorts in a bear market, what do you do after it pumps? The first thing you do is you look for shorts. You go, oh, where do I short? Rather than looking at and going, where do we pump from? Is this an actual move that I can take longs with? No, you don't think that way. You think, okay, I'm going to short it. Where do I short? So that's a good way of getting wrecked because you're taking the impulse trade, right? And the same way will happen when you're in a bull market, right? Because you've been making a lot of money on longs. So as soon as it does a dump, you go, okay, I'm going to long it. And you don't see what's happened to make that dump, right? You only see the dump, the buy. You don't see what happened before it because you get blinded by it, right? So it's a good idea to invert charts to flip your perspective a little bit, right? Just to check yourself a little bit before you wreck yourself, right? Like they do in the rap videos, right? So first of all, go to the monthly, all right? Find the failure, okay? Find the high failure, all right? High failure. Find the low one, right? Which is the low one, okay? Low one is here. Now, same thing you did before. You need to find the 0.6, okay? 0.6 makes sense, okay? Also makes sense. How we closed above it and tested it, we have, but let me show it to you guys. We've closed above it and we tested it. Okay, so you want to be holding the higher lows. First one we've held, okay. Because we've held the high low of this one, next one is we need to hold the high low of that one. Okay, we've held it. And we've been holding the higher lows ever since. That is why we've been pumping. As soon as we failed to hold the high low, what happened? Right? Which happened here, right? We failed to hold this high low right here. And we actually retested it as well. Right here. So not only did we fail, but actually we retested it. So that means there's a short opportunity. But this is an inverted chart, so it's actually a long opportunity. Right? So that's what you do. You're staircasing on the way down. Right? So you've qualified that this is a legit move. Right? Now what you need to do is you need to do two things. You need to find the levels that made new lows. This is the other new low, which is this level that made new lows. Did we make a new low on this one? Yeah, this also made new lows. So these are the important levels, 3 important levels. 1, 2, 3. Okay, we've already tested this one. We have probably already tested this one as well. Let's zoom in and check it out. Because if we hadn't, we would not have pumped. That's how you know we probably already did it. And that's how I know we probably already did it. Right, so if you go to the 1 hour. Okay. Go to the 15 minute. Okay, like, okay, shut the, go away. What the? Right, get the fuck out of here. Right, well, I don't know why I can't do that. Right, that's a fail right there. Right, but let's say even if we didn't do it, all right, let's assume we didn't do the retest. Okay, let's say we didn't do the retest. Right, off this level. Okay, I can't zoom in to show you, but let's assume we didn't. Okay, so we did the retest of this one, we did the retest of this one, but we didn't do it on this one. Okay, so that means this is a potential level for it just to come down. Delete that one, delete that one, keep that one. Okay. Right. So the only one you're keeping is this one. This one, this one. Those are the only two levels that are important. Okay. Now, you can use the sequence projection again to validate the move, right? Because now it's getting tricky. Now you're looking at this and going, all right, the only one I know is this one that's untested. I haven't qualified anything here, right? But what I'm going to try to do is I'm going to try to use this to see if there's anything here. Okay, let's do it. Okay, so same as before, find the low, find the high after the low, find the failure, and find the swing. Not the low, but the swing. Okay. It has qualified a zone here, right? So we closed above the 2, tested it, continuation. We closed above the 4, tested it, and continuation. And what you see here is a failure. So this is the first indication of a potential reversal that could lead it to come all the way down to this level, right? Remember this level? Right? The level we haven't tested yet. So this could lead all the way, come down to retest that one. Now you're thinking, all right, so I know where the potential target is for my second or my third profit target, but it's not going to be your first profit target. That's too wide for it, right? So it's got to be probably for your second or your third profit target. Now you need to go, all right, I know what the invalidation is. Now I need to qualify a trade. So I already know the invalidation. Now I need to go, all right, how do I qualify a trade? Okay, let's do it the same way we did before. Find the previous swings that made new lows. Do we retest it? Yep. Find the previous swings that made new lows. Do we retest it? Yep. Find the previous swing that made new lows. Do we retest it? Yep. So this is the most local range you can take the trade on, right? Now, you might think, oh, it's too late now. Yeah, you are correct. It is too late now. But that doesn't mean we can't reject this, hold the high, low, and continuation, right? Because we've held everything else. We've tested this, and we've tested this. So the only move that we had yet to test is the high ones, which is this one. Now, how do you know? Okay, there's a couple of ways to qualify it. Okay, same thing you did before. Find the low, find the high after the low, find the failure, find the swing, right? Not the low, but the swing. And you might be thinking, why not use this one? Because this is just the low. This is not a swing. Because you need to find the swing, which is this one. So you do a sequence from here to here. So now you've qualified a trade. level to hold, level to test, level to hold, level to test. So if we hold this level, the next PT would be we make new local highs. So what does that mean? It means you take trades from here to here. First PT, second PT. So from all that thing, now you've qualified a trade. Right? Step by step by step. So what you used is you use what happened in the higher time frame, narrow it down some more to qualify what's going to happen right now, or what's going to happen in the future, right? And how could you possibly trade that? And the most important thing is it worth it? Because for it to be worth it, you need to follow the 4 rules. First of all, only risk less than 0.5% per trade at any one time. That's the first rule. Okay, so before you take the trade, you have that sorted. Second rule, it must be 4 risk to reward from your first PT. So let's look at it. Is it 4 risk to reward? Is this is a short, right? So short, is this 4 risk to reward from your first PT, which is here? Okay, it is. All right. So we've ticked both of the boxes. Third box is you only take trades after a new low and a gain of level. We made a new low right here. That's why you're looking for a reversal, right? And we'd gained and tested the level. So we've also ticked the third box. And of course, the fourth box is move the stop loss to profit after second profit target, right? But that's, you know, that you don't really do that until you actually hit the second profit target, right? So, but the first 3 things we've confirmed and it's valid. So what does that mean? Is you take the trade. Okay. What is the RR? Risk to reward is what you're risking to what you're gaining out of it. And you always calculate your risk to reward from your entry to your first profit target, not to your second profit target, but to your first profit target, because that's the realistic target, right? Because I could just do it this way and just smoke some copium and go, oh, actually the trade is 7 risk to rewarded. Let's be fucking real. Use the first one, because that's a lot more realistic. So it's that way you're not inhaling a lot of fucking copium and hopium, right? Invalidation valid. Okay, continuation. So from all that, let's do it. So what profits you take is going to be dependent on you. But if you're new, meaning that you're not profitable yet, what I would always recommend is do 40, 20, 20. So first profit target, you close 40% of your trade. Second profit target, you close 20% of your trade. Third profit target, you close 20% of your trade. The reason you do it this way is your second profit target generally, a lot of the times, turns out to be the big resistance to gain, right? So by the time it hits your second profit target, you already closed 60% of your trade. So now what you can just do is move your stop loss just below your first profit target. So even if you get stopped out in profit, you still banked 4 risk to reward. Because remember, your first profit target was 4 risk to reward, remember? And you're following the 4th rule, which is after it hits your second profit target, you move your stop loss to profit. So even if the trade doesn't keep going, even if you get stopped out in profit, you have at least achieved what you set out to achieve, which is 4 risk to reward. That's why you do it that way. So 40, 20, 20. Okay? So right now in crypto, we did the same thing on crypto to anticipate this move, right? Find the previous low that took you down. Okay. You want to hold and gain the level. Okay, we've already held and tested the level. We already did this one. We already did this one, which is the most local one on the hourly. Very local one. So the only one that we needed to retest was this one, which we just did today. That's why when we were here somewhere, I was looking for to come down and retest this level. Now, because we've already made a new local low, lower than this low, what are you looking for it to do? Right? You're now looking for it to potentially go up and retest. Right? Because why? Because we made a new low. Right? We made a new low lower than this one, and also made a low lower than this one. So as soon as we made a new low, you're looking for a potential retest. So the idea that if we make lows, we're going to go lower isn't necessarily correct, because it depends on what we did in the top side, which people dismiss. So they only look at it this way. They get tunnel vision on this move. And then what happens is they take shorts and then they get stopped out. And then it dumps. Right? The same way people did on the way up. Right? So they look at it this way and they go, all right, this is the previous level to retest. So this is the level that took you down here. We went up, so you short it, and then you got literally immediately stopped out. Because you weren't paying attention to what was happening here. You were supposed to make new lows because of what was happening here. Now, how do you know? Okay, let's do the same thing that we did on the previous one. All right. Find the low. Okay, I think we all agree this is the low. Find the high after the low. All right, I think we all agree this is the high after the low. Now you might be thinking, why not pick this one? Because this one's made new highs. Okay. So this one's already made new highs, so it's already too late. Right? So the only one you can choose is this one. So find the swing of it and find the low. So now what you're looking for is the same as before. Level untested. Level tested. Level tested. So the only level we haven't tested is this one. And guess what? Where my arrow ends. The same way my arrow ended here on the 4. Right? Now, how do you define a swing? Okay. A swing, in other words, is a start of a move up. Okay? Now, it can't be the low of it. It can only be the high low of it, which is why it's this level. Right? Right? Because it can't be the low of it. So what you're doing is you eliminate, it's processed by elimination, right? So it can't be the low of it. It can't be this one. Why can't it be this one? Well, it can't be this one because you're using this as your high. So it can't be this one. Because if you were to use this one, you'd have to use this as the high. So this is the high, so it has to be before this high. Okay. It can't be this one. So the only one is this one. So that's how you qualify it. Right? Now, if it doesn't make sense on this one, right, you can use this one. All right. Let's go to the 3-minute and use this one. Okay. Find the low. Okay. We all agree this is the low. Find the high after the low. I think we all agree this is the high. Find the failure. The body of the failure. Right? Find the swing. Okay. Pull from here to here. That wasn't quite precise. There you go. So what you'll see is your break point. Your break point. Right? So if you were to take shorts, where's your first PT? This one. Where's your second PT? Is the other level that we talked about before. So you can also use this on the local ranges to qualify profit target levels and also invalidation levels, right? Because this is the local one, which is what we're holding right now, right? Now, you always do body to wick. So body to wick, always. Okay, you're not picking this one. You're not picking this one because this is after the fact. So the only one left is this one, right? And in crypto, you're using the multiplication of 4s. In stocks, you're using the multiplication of 6s. But the 0.6, 1.6, and 2.6 is always going to be the same, right? Yeah, body to wick. That's what I did, right? Body. Like, this is the body, guys. Body to wick. Body to wick. In FX, it's a 4, right? So if you go to the FX pair, right? Let's go to Aussie USD. And let's do the same thing. Okay. Right. Invert. Okay, it's going to be a little bit trickier. So you can, if you think you don't get it here, you can go to this one. Okay, so you can go to this one, try it this way, and look for confirmations. So you can just go to this one and go, all right, find the low, find the high after the low, find the failure, and find the swing. Now in this one is this swing here, because I know on the 1 hour there's a swing there. All right, for fuck's sake, there you go. And there it is. So what do? Is you pull from here to here, and you zoom out and you check. Okay, let's check. All right, the level to hold. Test, retest, okay. Hold, okay. Retest, okay. Failure. We did fail at that level. And we did come down and retest the high low of this one. Okay. And then we gained it again. When did we gain it? Okay, we gained it here. Since we gained it, we've just been keep going up until we failed it again here. Right? So now you can go to this time frame, right? And go, all right, this is the local failure, took you down. This is the other one that took you down. So what does that mean? It means if you're looking for a retest, because we will have made new lows now, so you're looking for a slight reversal here, what do you think is going to go to? It's going to go to retest that level. So let's invert the chart right way up. So what is the level to hold? That is the level to hold. If we hold that level, you're looking for it to new high, first PT, second PT, and that's the trade. It'll be a long entry, invalidation, first PT. Oh, that's a short. Oh, wait, sorry, that's sorry. I'm inverting the charts and I'm confusing myself. My bad. So let me do that again. That's a short. Looking for it to make a new high, which is higher than this high. Okay. So is that a full risk reward? Barely, but yeah. So that qualifies as a trade. Because if we hold the swing, you're looking for it to make new highs higher than this one. Right? Because that is the reason you're looking to retest. Right? Why is the stop loss here? Well, let's narrow it down. You're not going to have a stop loss here because that would mean that risk reward is fucked up. Right? So the only place to have a stop loss is this one. Because that was the only way you're gonna have a full risk reward. Because until you have full risk to reward, you don't fucking take the trade. So, process of elimination. If it was here, you wouldn't take the trade. So don't worry about it. So the only way you would take the fucking trade is if the stop loss was here. Does that make sense? That's why the stop loss is here. Because that's the only way you take the trade. Right? Because you know what the target is, you know what the entry is, so now all you need to do is fuck around with the stop loss to make sure that the risk reward is full. Because you know the 2 out of the 3 equations. To do a risk to reward, you need to know the target. You already know that. You need to know the entry. You already know that. So the only thing you can do is move the stop loss around. And you can't have it here because that's too wide and it will be too risk to reward. So that's a no-go. So the only way to do it is below that swing there, because at least that will give you full risk to reward. That's it. That's it. It's not that complicated. That's fucking it. Now, you can force the trade to make it a lot more fucking tighter, but then, like, generally you want to have it below or above something, right? You generally want to have it below or above something. Now, if you force the trade to make sure that your risk reward is amazing, like, you have your stop loss, like, in the middle of nowhere. If you have it here, at least it's above these levels, right? So that's why you do it this way. Because otherwise, you're going to be greedy about it, and you're just going to force it and go, you know what? I don't want 4 risk reward, I want 10. I'm going to do it this way. But, like, having a stop loss here wouldn't make fucking sense. That's a dumb spot. Because this is the range you want to hold. And it would make sense to have the stop loss somewhere around the top of it. Thus, the stop loss here. Because you can still make 4 risk to reward, but it's above the range. And, like, as I say it, it's going up. Like, as you can fucking see. Like, I mean, as I'm explaining things, it's actually going up, right? We are having a reversal. Right? Now you might be thinking, all right, so does that mean as soon as it gets that level, you take a short, take a long? No, no. This is a thing that you have to be very careful on. Okay, so the idea of taking a long here is correct, but you generally don't want to do it, right, on the impulse. So what you want to do generally, there's 2 ways of doing it. Okay, there's 2 ways of doing it. I'll give you 2 ways of doing it. First way, you can take the trade on the impulse, but you only take trades 30% of what you were going in with on the impulse. And the 60% of it, you do it after the confirmation. So the 30% of it, you do it here, and the rest of it, you do it here. So that you can do it that way. If you're one of those people who go, oh, but I don't want to miss the trade, okay, fair enough. Only use 1/3 to enter. And the other part of it, you only do it on the retest. Okay? That's one way of doing it. Or you can just only take the retest, right? But if you're one of those people who go, oh, but I don't want to miss the trade, I want money now, blah, 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 then, okay, that's the solution. Take it or fucking leave it. All right, there you go. All right, so that's hopefully, I don't know how long that was. That was probably like almost an hour, I think. Explanation, we went 40 minutes, 45 minutes, thank you. On price action and how to validate price action, how to invalidate it, and how to take trades with it, right? So I went through a lot of that shit in that 45 minutes. So you probably need to watch it, rewatch it over and over again before you understand it. Okay? Just don't watch it once and go, oh, I get it. Because let's be fucking real, you don't get it. Because you're not Rain Man. Right? You probably need to watch it many, many, many times before. All right? So the same reason that we're looking at the thing to reverse on whatever that was, Aussie, I think, USD, It's the same reason you're looking for a reversal here. Again, made new lows. So you're looking for the reverse. Is literally what we're doing right now, right? The same fucking trade. Doesn't matter what ticker, doesn't matter what thing. It's the same fucking trade. The same thing, right? So what does that mean? It means you took profits here, which again, we talked about, right? On this one, right? I took profits at this line here, right? Which is why I told you guys to take some profits at, right? At this range. Right? So it all makes sense, right? It all makes sense. In the beginning, it won't, because it'll look like magic and it'll look like whatever, but it will all make sense in the end. All right? There you go. Okay, that's enough. My throat is a little fucked, so I'm gonna drink some water. Excuse me.